Okay, we've got about 5 people on the call. Make sure, 6 now, make sure that you're muting yourself. We'll give it 1 minute for everybody to join. And what I'm gonna do is I'm actually gonna go live on Facebook. So I'm trying to pull up my presentation to show you guys. It's gonna be kind of a quick one. And then what I'm gonna ask actually is for everybody to participate in kind of like a Q&A session. So if you guys have any questions and you need answers to more than I'm going to cover today, I'm going to cover, like I said, a slide deck, and then I have kind of like a one-pager sheet that I'm happy to, I'm going to make some notes if you have requests that I'm happy to give to you after the webinar. Just give me 1 second to pop up the Facebook share, and then it will ask me to, of course, live on Facebook, give it a description. While you guys are waiting, would you do me a favor and would you put in the chat box you guys are on Zoom, and then when I open this up on Facebook, it will actually ask me, it will give me some other comments through Facebook Live, so I'll be on my phone answering those. But if you guys could pop in some Q&A that you already have. But biggest thing, honestly, let me know where you're coming from. I'm curious, like where everybody is on the webinar. If you guys are all local in Texas or if you're all over the country, please drop in the chat box any questions that you have, and like I mentioned, especially where you guys are coming from. So I'm looking at the chat, and then anything that you want to share as well before we get started. Let me enter in the description, go live on Facebook, and then I'll be right back. 1 second. Please, like I said, let me know where you guys are all coming from while you're watching this. Okay, let's go live. We'll share my screen. I'll just go minimize it. All right, so we've got Bill is in PA outside of Philadelphia. Cool, so you're on the East Coast, so thank you for joining us at 1 your time. Let me take okay, we are live, so let me minimize and screen share. In Detroit, Michigan, Christina, that's right, you're in Detroit. Hopefully the weather's really nice right now. It is super hot here. So let me pull up the presentation real quick. I don't know if it loaded on beautiful.ai. Nope, it's not loading there, so I will take the downloaded version. 1 second. Share the screen. Okay, so we're going to share. And I'm going to actually have to pull some stuff from my org chart here. So I've got a short presentation just to give you guys a little bit more info about the fund itself, and then I'll come back to this for the fund structure, et cetera. So, and we're going over crowdfunding today. So this is something that launched in July, so just recently. And I will come back to go over some more of the nitty-gritty details in a minute. All right, let's load this thing up. Let's see, got one more comment in the chat. Today is better than the last few. Okay, good, Christine. I'm glad that your weather is good. Let me get this going and hopefully knock it out. And then I will come back to the comments, etc. So everybody, thank you so much for taking your time on a Saturday. I'm recording this right now, really excited that there's like 7 people on the call, and it's also streaming live on Facebook. And this is exciting because I'm allowed to publicly advertise finally how we are able to take individuals into our crowdfunding offering. So like I said, after I'm done with the slide deck, I will show you guys and ladies the breakdown of our organization chart, which means, what all the LLCs are doing, where they're going, where the money's flowing, all that fun stuff. All right, so this is about VERNAFUNDCF is the name of the LLC. It's a female-focused value-add multifamily crowd fund by Apartment Queen Investments. Okay, so you guys already know us. Apartment Queen Investments, we are an experienced operator team with over 64 million assets under management right now, but we've got another 10 million coming. So very excited about that. We are operating in landlord, business, and tax-friendly states. We are primarily focused in Texas. We've got some pretty big goals. We're looking to close 200 million in assets under management by 2022, and we are wanting to create 1 billion Shevesters by 2030. So how are we going to do that? So note that this is the organization chart that you guys are going to be seeing. I think I can zoom in later if you can't see it close enough, or I can send you a copy. I believe that this is actually on the link. So in the video, if you guys are watching on Facebook Live right now, the link that is in the description of the video, that's actually where you click to go to the crowdfunding platform. And this is one of the attached documents in the offering. So basically, this is just noting that you guys need to know that the securities or ownership shares being offered for purchase are for membership interests for members of VERNAFUNDCF LLC. Like I mentioned, this is the crowdfunding offering. It's crowdfunding LLC. This CF LLC directly invests into VernaFund 20. So as you can maybe see on this chart right here, so you can see that the APQ Fund Manager LLC is me, the GP or the fiduciary. There is the manager that is managing the fund. So VernaFund 20 LLC, you can see right here. So what is also going into the fund are 2 LLCs that we have, and each LLC can take different types of investors. So you can see there's VernaFundCF LLC, and then there's VernaFundD LLC. And you can see the little orange at the bottom. Those are all of the investors that are coming into each kind. So Reg CF investors come into Reg C, Reg D investors go into Reg D, and those are accredited. Reg CF are non-accredited. So both of those entities take the funds through different bank accounts, and they get funneled back into or funneled down to VernaFund 20 LLC. And what that is structured as is it's structured to go into an asset as a special purpose vehicle, or SPV. You can see right here the blue from the big blue dot, it goes into these little SPVs. So that's the assets. So then basically this fund is taking its funds and it is investing in the general partnership, or its fund is investing. So for example, if you invested in a business, you'd invest as Kaylee LLC or whatever. So this is VernaFund LLC. And VernaFund LLC is going to be investing in an asset syndication. So the asset syndication can either be something, I'll answer this now, can be something that is either started or owned by us or me or one of my partners. But specifically what the money goes into is it goes into a deal that is sponsored by somebody that I know very well. Again, in addition, the protection for investors are that it's a special purpose vehicle. So normally a fund would just invest as a large limited partner or LP into another syndication or another deal of some sort. And then it would have no voting rights. It would not be able to figure out or negotiate or be a part of the decision-making for refinance, sale, and then cash distributions for the investors. So we do the SPV so that we can be part of the general partnership. The SPV also protects the investors that are inside that vehicle, because the biggest benefit that you get as an LP, a limited partner, is that you're not liable if there are issues with the asset or if the asset goes under. Essentially, you're limited to your investment. So, and then that's in the worst case ever, that you could just lose your whole investment, because we actually have a physical asset that if everything goes wrong, we still can loan out from it. We still can sell it. We still can do multiple different things. So long story short, the special purpose vehicle basically puts all the investors together and gets us into the active partnership, so that, again, it's not just a large LP investing into whose ever deals with no decision-making capabilities. And the deals that it's, like I said, investing into are deals where the sponsorship team are highly vetted by me. I spend usually up to a year spending time with these people, really getting to know their business, watching how they behave and how they handle distress. So it was really good to watch how people handled COVID this last year, to see really what's going on with all the different assets and, you know, to who we will not be investing with. And I like to watch a lot of people. So let's move on. The manager, like I mentioned, is APQ Fund Manager LLC, is the sole manager of VernaFund 20. Like you can see over here, our manager, Kaylee, will oversee fund accounting, audit production, asset selection, and partnerships with vetted and carefully selected sponsors, like I just mentioned. And we have to disclose fees, of course. So the fees for VernaFund 20 is 1% acquisition fee. Now, this is a 1% acquisition fee that is paid when the fund is full. So this is a challenge, because especially with crowdfunding, we are taking very little amount. So it's going to take kind of a while to get going until we get our ads up and whatnot. But the acquisition fee, because I did a drawdown structure, which doesn't really apply anymore, but just let's say because I did that structure, that fund cannot be paid out until the fund is full with the $5 million in the total that we're raising. And we have funded it. So that acquisition fee is of the total fund amount. So for example, when I normally do a deal, one-off deals, the acquisition fee would be anywhere between 2 to 5% is the market rate. So with the 2 to 5% that you are getting for an asset management or a acquisition fee, that acquisition fee is off of the purchase price of the property. So if we're purchasing a $20 million deal, that asset management, because a lot of big groups have turned people off to asset management or to acquisition fees, which I think is nuts, because deals are so hard to find right now. We have to look at 200 to find something, well, 100 to find something that's reasonable, 200 to close on 1 to 2. So anyway, it's incredibly difficult to find a good deal that will give investors returns they expect. So that acquisition fee is mandatory. I don't know why you would not want to pay people to do work for you, you know. But anyway, the acquisition fee, it can be a little when you're looking at a single asset syndication than when you're used to like a fund like this. Like I said, the fund is $5 million. So the acquisition fee doesn't get paid out to managers till it's full, 1. And 2, it's of the whole fund size. So this fund can be leveraged up to purchase 20 million in assets. It's 5 million in cash that's being raised. So that's based on like a 75% limit, LTV or lending ratio, basically, loan to value cost. Or loan to value loan. And so basically the 20 million in assets being purchased, that is not how the acquisition works, where it would be 1% or what the acquisition fee would be 1% of the asset value purchased. It's 1% of funds raised in the fund. There's a 2% fund asset management of gross receipts. So I said gross receipts on purpose because, again, sometimes when you look at different operators' offerings, it will say a fund, or it will say not just fund, it'll say asset management cost of 2%. And it won't delineate or define what it's of. So what is 2% of? So this is 2% of gross receipts. So for example, if the 20 million in assets are making 14K a month per property, say there are, like, this is just kind of a guess, say there are, 6 properties, that's like $200-ish per property. So that's really not a lot of money to basically be asset managing the deal and making sure that everything is being executed, because like I said, we are part of the general partnership as an entity. So we are a key partner in each deal. There's also a 5% construction oversight management fee. So that is 5% of the gross receipts again. So or gross proceeds, I guess, distributed to those loans. So this is just the fees. We have to disclose them, of course, up front. So here's where we kind of get into the meat and why the heck did Kaylee start doing a fund? I've done 7 deals with different partners, gone full cycle myself on 1, exited 2 almost, and have another one for sale. And then my partners have gone full cycle on 6. Why would Kaylee want to switch from a single family asset model to a fund model? Well, there's a couple of things. So for example, when you're doing a single asset, you're just doing business, right? So there really isn't a purpose behind your deals. You can do certain things to affect the community, as far as like opening up your community center, having, food trucks, making sure that there are different community organizations operating out of your asset to be able to do after school kids care, things like that. But that's kind of the limit to how much we can affect our community, is just literally inside the community. Whereas a fund has a fund thesis. And so the fund thesis is the why behind why we would do a fund. And so at large, what we're looking to do is actually pour back into our community and the world as a whole. Like I mentioned, the 1 billion Shevesters, that's a big, big freaking number. So that big number is tied to the population of the planet. You know what I mean? Like 7 billion people. So anyway, that's why it's achievable. So what we see is that as a problem is that less than 30% of the people in commercial real estate are female. Weird. The wage gap exists between men and women in commercial real estate, and of course every other industry, but you can also see it in commercial real estate. We believe that this is due to the fact that few women have access to ownership opportunities in commercial real estate based on 1, capital required to enter, it's usually 50K minimum, and 2, accredited status requirements or sophisticated requirements, regardless. So women know that they need to build wealth. They know that they need to create wealth, but few women have access to opportunities in commercial real estate. So we end up seeing that women make less money than men in commercial real estate. So, what are we doing about it? So we also notice as well that not just do we have those 2 issues that are causing the barrier to entry to reduce the amount of women that are invested in key principals and leaders and executives in multifamily real estate, but another trend that we're seeing out there is that 1/4 of women, period, are abused. And 98% of those ladies are also experiencing financial abuse in 98% of cases, like I mentioned, which is literally all of them. Most women who are financially empowered avoid abuse. Empowering women financially is our duty to end abuse. So how does this whole thing work? Here's our solution. So investors who want strong, stable, passive returns create a profile on our portal, and they get access to the deals that they couldn't get access to before. Because like I mentioned, you don't need to have 50K or be accredited to get into these deals. Now you have access to deals that are normally only reserved for people that will usually put in 100K plus as an accredited type person. So now we're lowering the barrier to entry to get institutional quality deals to our investors. Step 2, fund members financially empower women operators by funding our apartment deals. So those investors that get involved with our fund are also empowering women-led teams who are highly vetted, again, like I mentioned before, highly experienced, and overall are collaborative and work together very well. So number 3, this is also how this works in our solution, is that the fund partners receive the fund limited partners receive mailbox money and tax incentives. These checks and incentives are making women more money in addition to their wages, compensating for the wage gap or attempting to. Women experience women experience, which is financially empowering women. Here's the other way that it works as well, is that I find that for my own situation, I can give an example that, if I was in a situation where I needed to leave, and so leaving a living situation, you need some money to do that, right? So you're going to need some cash to be able to, for me, go get a U-Haul, put a hitch on your trailer or hitch on your truck, be able to put down a deposit on a new place that you're moving to. And there's many other factors involved too that are financial. Well, the thing is I'm not going to help to be able to provide a job with active income. That is something that you can do. But if you have more time available because you're making passive income, that's one way that you're able to have more freedom. Also, if you have worked any corporate jobs in the past, you likely have retirement accounts that can either experience an in-service rollover and move into a deal that can double those returns and make your nest egg larger later, tax-free. But also it gives you these tax incentives where, especially if you're a real estate professional, you have the ability to be able to potentially, I'm not a CPA, but potentially offset all of your active income if, like I said, you're a real estate professional. So just go get your license and start doing some stuff like underwrite, go look at deals, I'll teach you how. But point is if you're a real estate professional, you can really benefit from these multifamily deals. And so if you're able to decrease your taxable expenses, you're decreasing your overall expense. So AKA increasing your income. It's kind of the same thing when we're looking at a property to be able to increase the net operating income. If we decrease expenses, we're increasing income. And then there's some additional things that we can do as well, like cost segregation, extra advantages that you get. But K1 income is great because like I said, it's not taxed as high if you have to have it taxed. And if you're a real estate professional, you can really benefit from reducing your overall expenses and being able to put more money aside for whatever it is that you need to do in the present day to take care of yourself. Also, that passive income is being made for you without you having to do anything. So you have time to go, whether it's fix something that you have to work on, or whether it is to have meetings to build your career, or whatever it is that you need to take care of yourself and be able to financially empower yourself. So I'll quit babbling on that one. What is our target market demographic? You're like, hey, Kaylee, what makes you pick these deals? Why would we invest with you? And what makes these deals exciting to us as an investor? Well, there's a couple things that we make sure that each deal has. We have a 5-pronged system. So as you can see in front of you, population growth, median household increase percentage, median house and condo value growth, job growth by age percentage, and crime decrease are the five key prongs that we have to have on our deals. Now, the thing is you can see that I'm not going to go into the weeds. You can have a copy of this if you'd like this, but this actually delineates like between the years X and Y, how much growth that we need per population size. And for example, if I'm looking at a potential deal and I see that it meets 3 out of 5, then I get excited about it. I'm going to go look at it. And then I can see, okay, can we overcome some of the other challenges? Like, for example, I really can't go buy in an area where the crime is increasing or the crime has never gone down. Typically, we'd be investing in an area that, we're just surrounded by things that are going to bring the property down, no matter how much money we put into it, no matter how much time. It's kind of a deal breaker. So there's certain things where job growth may be flexible depending on the size of the market and depending on the types of jobs. Okay, are the jobs primarily medical, downstream oil, so meaning plastics? Are there certain things that are not going to fluctuate over time and they're more stable? So without getting into too much detail, like this breaks down exactly what we expect for our population, household, condo, home value growth, job growth, and crime decrease. So those are our basic expectations that we have of the target demographics for each market we're looking at. Now, how do we select properties that we invest in continued? So our criteria is 60 plus units is our target. We want to have a motivated seller for sure, especially with this fund. And then 1970s or newer properties. Some of these can be flexible depending on how solid the deal is. For example, if I was going to buy something like I did in Fort Worth that was a 1920 build, but all of the mechanical, electrical, plumbing was already replaced. The foundation was good. There were no issues with any environmental studies. We had it all checked out. There's no reason why we wouldn't be able to just renovate what we need to. And it happened to be a historic property too. So sometimes these are flexible, but typically we like to stay with a bigger unit size. That can vary because in DFW, we have economies of scale. If the properties are within 20 to 30 minutes of each other, we can use the same property manager and reduce the amount that the management fees cost. So what we target is Phoenix and Texas, primary markets only unless the property is 100% unrenovated. So I have been looking, like I mentioned, for this fund in secondary markets, Corpus Christi, Amarillo. We've been looking in Lubbock. We've been looking in several other secondary, tertiary markets in Texas because Texas has been landlord, tax, and business friendly. And it's been growing like crazy because of all the other states who are not landlord, tax, and business friendly over COVID. So we're looking for a C+ class property to increase it one class higher. And then also right here, it says 6 cap rate minimum. That's definitely what I'm seeing in these secondary markets. However, sometimes in a primary market, if we get a good deal, I'm willing to, like if we have $200 rent bumps possible, I'm willing to take it closer to 5.5 cap, then the cap doesn't matter as long as the value is there and we can suck the value out of the property. So we want 70% plus of the units not upgraded. What's also not on here is we expect that we have all floor plans 10 to 15, actually it's down here, it got cut off, 10 to 15% below market rates at a minimum. Sometimes it's more, so that's always great. Like right now we've got one that's I think 20% below market average for every floor plan, so that's a winner. So that's how we select our properties. And just to let you guys know, who are we? What's kind of a part of our track record? You can see this on our website, theapartmentqueen.com. However, right now we have 64 plus million assets under management, which is what AUM means. We have 750 plus apartment doors. So we have 750 plus 111 plus 111, but those have not closed yet. So we're getting close to 1,000. We have 400 plus investors as a conglomerate or as an entire team together. So there are several GP partnerships that we had put together to do these deals, right? Because I cannot be everywhere. I cannot do it all. There's no way. We always have to have boots on the ground. So for example, we have the flats at 2030. I don't think it says it on there, but that's about 240 some odd units. Luda May, that's 23 units in Fort Worth, Texas. I wish I had it before and after on that photo. That's the after. It looks awesome. Before it was like gross. Village on University, so we changed the name on that one. It's 133 units. Aspens and Century Tree in West Texas. We've got a couple of more properties, one in South Dallas, it's 48 units. And you can see all the remaining ones as well on my website, theapartmentqueen.com. You go to top tab and it's investor resources, scroll down, and past projects is where you can find the remaining. And those in progress, I don't think are on there yet. So let's go over how this works. What's next? What do we do? So first, phase 1, you got to review documents. We suggest with counsel. So if you have a real estate attorney that you trust, if you have a family attorney that you trust, even with your CPA, if they could say that this doesn't make sense, here's some questions to ask the operating team. That would be something that we like to answer questions, because that means that you're invested, you understand what you're getting into, and that you have spent the time to really figure out, is this a good fit for you or not, And then step 2 is to invest. So what we're looking to raise as a minimum is $107,000. Like, we have to raise that. We've already gone past that. We're over $200,000 now, and this is just with the crowdfunding offering. With the Reg D offering, we're over $1 million, 1.2 million. And that's because accredited people typically invest more all at one chunk. So our target maximum here that we're getting to is $1 million basically. Our preferred return to our investors is 7 to 7.25%, depending on your share class. The distributions to investors are quarterly after year 1, when we can complete all of our construction and we have the property stabilized and we know exactly what our rents are now changed to, what kind of cash flow are we looking at. Like on my property that's in Fort Worth, for example, the other day we were trying to figure out why we're having issues leasing. Well, it was because when we came in before renovating, The units were $1,100, and they were trying to get new people in them at $1,400. And our year one projection for increase in rent was $25, not $400 or $300, I mean. So I go, let's take that down a little bit. But I mean, that's insane. So point is that's taken us months of construction and marketing and advertising to be able to get renters in at such a change in rent. And so now that we know, snapshot, here's what the income looks like, we're going to continue to get that income. We can now start distributing the rent and cash flow that we've been saving up and have to investors. What are you looking at getting with this fund? So you're looking at getting 9 to 13% cash on cash minimum. And I had this question on the phone the other day. What does cash on cash mean? So for example, if I was to invest into a deal, a house, something like that, and basically you were looking at all of your expenses, your net profit basically is what you want to know. So all of your profit after taxes, income, insurance, every single expense that you have, even utility bills, anything, hold costs, loan, after you subtract your expenses, that is your net. So what is your net monthly? Then take it annualized over 12 months. Then you can see annualize what your cash is that you're taking in. Now then what you want to do is divide it by the initial input of cash that you put in. And then you see, okay, based on the cash I put in and the cash I'm making, what is my return annualized? So that's where you get your cash on cash. So typically when I look at an unleveraged or a house that someone owns where it's just owned in cash, always their return seems to be about like 4 to 5% cash on cash. So we're telling you guys that we're aiming in the double digits. The two assets we have in the fund right now, cash on cash per each, is looking for one asset at 10% and the other asset 12% minimum. So we're always trying to go over that 9%. So that's why we kind of give a little bit of a range. So that's our minimum cash on cash. So 15% internal rate of return. That's another metric that a lot of people familiar with the stock market would understand. But basically what you're looking at is kind of like cash on cash, but it's the internal rate of return on your cash within that deal on an unleveraged or like without a loan. So without making it too complicated, IRR, is a metric that means the same thing as that cash on cash to certain people. And then you have a minimum of 1.75 equity multiple. And so to simplify that really simple, if you were to give us $100,000 and you gave us the time frame we needed to finish our project and to either sell or refinance, then you'd be receiving $175,000. And that's just an example at minimum. So then that doesn't include any kind of cash out refis. We distribute that to all the members as well, or any other kind of creative things. Sometimes there's storms and sometimes there's accidents and fires that end up getting us more proceeds by negotiating than we had originally saved. And long story short, there are sometimes incidents that give you more, but the point is 1.75 equity multiple. I think that's a reasonable example to give you an idea. So VernaFund 20 and its goals, like I mentioned, 15% plus internal rate of return is what we're looking for, net of fees and expenses. The number of doors and target assets under management, we're looking to acquire 25 to 1,200 units per property. Our price that we're targeting is $500K to $15 million per property. And our exit target is 3 to 5 years at sale, 3 to 5 years for sale and at least 75% return on principal. So it's 1.75 equity multiple. Now I would go ahead and just default to the most conservative thing here. And I would just say, okay, I'm going to be in this deal for 5 years, right? So you always go to the latter. So let's say 5 years hold time is what we're projecting, because things happen with the market that we can't predict. So what are your next steps to get involved with Crowdfund Main Street? So step one, if you're ready to review your offering documents, you can go to CFM here. I have it highlighted or linked on here. Again, if you're on Facebook right now, the link is in the link is actually in the description of the chat, or sorry, the description of the video. And I'm also going to stick that in the chat right now. So you have that if you guys are not already registered on the platform, if you haven't already invested. This is where you go if you're not accredited, basically. So go there. And then number 2, you hold your spot by submitting your application. And number 3, you basically submit 100% of your investment within 1 week. So basically 5 business days of finishing your documents. That has to be done. Otherwise, there's fees associated and nobody likes fees. So we want to make sure that we do that. So again, this disclaimer usually comes in the beginning, but I didn't want people to hop on the video and be like, oh my God, I'm so bored, I'm off now. So basically, here is the disclaimer. This presentation is for the raise of investment via crowdfund CF regulation crowdfunding offering conducted via Crowdfund Main Street. This presentation does not purport to be all-inclusive or to contain all of the information that a recipient requires to make an investment decision. Offers and sales of equity securities will be made only in accordance with applicable security laws pursuant to Form C, not Form D, Form C, and other definitive documentation. There is no guarantee of any estimates or projections contained herein that can be achieved by the company or VERNAFUND20 LLC. Investors should pay particular attention to the structure of the investment, namely the indirect investment into VERNAFUND20 and the fact that the real estate assets therein will also be in most cases indirect. No investment, divestment, or other financial decisions or actions should be based solely on the information in this presentation. Actual results may vary from the projections, such as variations may be material, including the possibility an investor may lose some or all of their invested capital. As always, investments via crowdfunding are inherently risky and there's no guarantee of success. Investors are advised to consult with their own attorneys, already as mentioned, and financial planners prior to investing. Nothing contained here should be taken as legal, financial, or investment advice. Thank you for watching the presentation today. So I'm going to exit real quick off of this screen if I can. So that is my little presentation here. And I'm also going to show this to you guys now that you're watching my screen. This is a little flyer that I made, just if you'd like a copy of it. It basically does all, takes all of the stuff that I said and basically, bam, puts it into a one-pager. So this is what your pros of a real estate fund are. You might go, why would I divest or invest, excuse me, into a real estate fund? Well, number one, you're going to make great returns while helping women feel powerful, in charge, and independent. Again, the operators are females, and I would say at this point, 90% of our investors are either a household that the woman is leading the investments and she's very aware of what's going on, or it's a woman that's just single and she, not just, but is single and she's in charge of her own wallet, basically. So the pros of a real estate fund, why would I do a real estate fund? Diversification. You could never take that 50K, 40K, whatever it is you're putting in, and get into 5, 6 different apartment deals. There's no way. You'd have to put in that amount per deal. Again, you're getting one K1 versus like 5, 6, 7. Say if there are multiple deals that you're in, you don't have to have multiple tax forms that you have to find, track down, make copies of, submit to your to the IRS. I mean, and then later on, if you need those for bookkeeping purposes, you're getting one K1, or we are, and then basically you're getting a statement divided by your amount of ownership. So you can be in 5, 6, 7 deals in this fund without having to have multiple different things to track for taxes, which is cool. Also, this helps to reduce your networking to find sponsors. A lot of investors have to spend a lot of their time going to meetings and meetups and yada, yada to meet different sponsors, then spend time with them, then get to know them, then try them out on a deal. Then if you have a sponsor that you like, that you trust, I mean, it's really easy once you're into a fund, then you can get involved in multiple deals and not have to continue to invest over and over and network to meet multiple operators. You're going to get high quality deals, big deals that are involving a very much a professional a professional team that's going to attack these deals without having to have a high entry price. Like I mentioned for the crowdfunding offering, if you don't have $50,000 in your IRA, or if you don't have $50,000 cash you want to invest, you need to talk to me. You need to email me and tell me what you're working with, and we can figure something out. That's kind of why I put this together, because women are not taught to invest. We're taught to donate and save, and there's also the wage gap. So we don't typically have that extra slush money to put into stuff. Also, my single parent mothers are also telling me that, hey, I have to put up the expenses for the kids basically, and I get lucky if I end up getting child support and getting paid back for it, you know? So in the meantime, my cash or whatever my income is gets very low, and so I don't have the extra money to invest. So let's be able to make it work for you. You don't have to be, you know, a large investor. Transparency. So here's another thing that I find is different and unique, is that we have a certain specific fund CPA. I'm actually going to do a webinar with her that is just over the property level books. So meaning each different property in the fund has property level books that's produced to all investors once a month. She will look at those, and then she will put them together basically in a package. Those packages I will report on individually within the fund, I'll report on them all at once. The performance to the investors, but basically she's checking monthly to make sure there's no red flags, which helps us to catch things that are not right away. I've had deals where it's been 2 years in the making, and we start catching things, and that's when it causes a huge problem and lots of costs for audits. So we keep up on the property level books monthly. Then in addition to that, the company is constantly valued every month. So your shares are valued constantly with a discount cash flow method, if any of y'all are CPAs out there. But basically what that's doing is saying, here's the value of your shares at this present time. We also do a big version of that once annually, where we get a third-party company to come in to audit all the books. We create an audit binder, and all of the investors that are in this investment via the portal are able to go look through pages and pages of information. Where are the checks being made to? What was spent? Why was it spent? Copious notes. All that is audited. So when I've been in Regulation D, deals, that is not required. There's no requirement to have any kind of audits on a regular basis or have any kind of public, it's not public, it's private to the company, but any kind of regularly, readily available already audited books. So I like transparency. Hopefully y'all do as well. This goes through the uniqueness of the fund. The special purpose vehicle protects the limited partners. A lot of funds don't have that. Like I mentioned, the acquisition fee is 1%. The market rate for acquisition fee is 2 to 5%. We're also offering a preferred return to investors, 7 to 7.25%. And how does that work, Kaylee? What's the difference? So for male investors that are adding a mentee to their subscription, she gets a read-only portal access. And if she makes a comment once a quarter for a year, what she's learning, then his preferred return gets bumped up to 7.25. So 25 basis points, it's a pretty big deal. So it's just another attempt by us to be able to incentivize men to educate women in their life about their investments. We also have the buyout availability in the operating documents. Typically your investment is illiquid, but if life happens and this is not, I put in $2,000 and I need it tomorrow because I didn't have the money in the first place, actually the crowdfunding portal will evaluate your net worth and your liquidity and your income and give you a limit to what would not be uncomfortable. So again, like if I was investing in something and I only had $100,000 in assets, and so we want to keep your investment below like 10% of what you have, to not make you uncomfortable. If something either needs to hold longer or something doesn't go well, the first year that we have it. So basically, there's provisions in our operating agreements that you can see that go through what the buyout process looks like. So for example, I won't get into the nitty gritties, but basically, if you want to opt out, then you get evaluation, you come to the company, you get the company first right of refusal, then the other members get the right to buy it if the company doesn't want to buy it, so they can increase their share percentage and own more and make more money. Then if no one wants to budge for some reason, then there's the ability to find a qualified investor that can replace you, and so they can come in and replace you. So there's definitely the possibility of that if you have a major life incident happening that we can work with you on. So again, not willy-nilly. It's like a major event needs to be happening, and there has to be those, but there's provisions is what I'm saying. So there's also a lower minimum for you if you're not accredited. So our minimum for accrediteds are at least $50,000. And that's typically what our unaccredited people or sophisticated investors put in as well. But typically because of your net worth and your income requirements or limits that are inside the crowdfunding platform, typically your investment, like I have people that normally invest 50 and they're only able to invest 40, for example. So it just really it changes based on your net worth liquidity. You can see kind of how we already mentioned in the presentation, what do you get as an investor? Here's the returns that we already went over. We also do year one, you get bonus depreciation from cost segregation. So on each of the properties inside this fund, because they're all value add deals, they're all not new, we're able to do a cost seg immediately. We have a projected 5-year exit, so it's not a crazy long hold time. It's an 80-20 equity split. That's another thing that you get that I think is extremely generous. Normally we do a 70-30 split of all the equity after the preferred return. So we have investors get paid preferred return first, then the remaining cash gets split 80-20 in this situation. Like I said, management fees are gross receipts, not just, hey, I got 2% of the asset value or 2% of all of the income or 2% of whatever, it's of the gross receipts. So after expense, gross receipts of the property. So as of July 1st, like I think I already mentioned, we can now take non-accredited investors. Here is my phone number that you can see here. I'm going to give you all like a second to write it down if you need it. And then also, this is my email here, admin@theapartmentqueen.com. Again, write that down if you need to email me any questions. And this is just some snapshots of the photos or of the assets that are already in the fund. So we're looking to acquire a few more assets. So this building right here, which is super cool, is 111 units. And then behind it is a portfolio in Corpus Christi of 2 different properties. That's also a total of 111 units. So that's where I'm getting my like 222. And then this actual brick building in the middle here, there's several down units and a ton of unused space that we're going to flip into units. So there's going to be more units when we're done with this. Again, I'm happy to give you a copy of this if you'd like. Just give me that in the chat. And I'm going to show you this real quick before I go to questions. So this was the organization chart that was in the presentation that was small. So this is the blown up version of it. And again, I can send this to you if you want it as well. But you can see the manager is over here, and that is the fiduciary. The fiduciary basically is in charge of the fund. And you can see that the investors are the orange down at the bottom. Regulation D investors, so our accredited individuals, come into VernaFund. Our crowdfunding offering takes the non-accredited investors in their funds, and they have separate bank accounts. Then those get put into VernaFund 20 LLC, and then the main fund invests as a special purpose vehicle. So as part of the GP as an entity with me as the lead and you guys as limited partners, which is good because it protects you still. I'm investing into assets that are as an SPV or special purpose vehicle. So, and then of course we have the lender over here that is part of the deals because it is a debt leveraged asset, meaning that we definitely do put loans on the property. So again, I'm happy to share this with you if you'd like it, but I mean, I think that's kind of like full transparency. There's a lot here about like escrow requirements and the EIN and, you know, whatever documents that you may want. I have them available, of course, because I put this thing together. I'm going to go ahead and go to questions and answer those for you. And I think I'm going to stop share. I think if y'all want, oh, she's been waiting for a while. I think if y'all want to ask questions, I think you can actually go into the raise hand feature. I believe that's not disabled in here. And then I'm happy to actually have you come on and speak. Let's see, there's a couple of questions. Okay. So question, what are the minimums for crowdfunding and for qualified investors? So Bill, the answer to that question is minimums for crowdfunding. So my actual question back to you would be, what do you have to work with? Because like I already mentioned, typically the minimum is $50,000 to invest into any kind of, not crowdfunding, but any kind of real estate deal. And so this is a real estate syndication, a real estate deal. And so I just need to talk to you and see what you're comfortable with. And part of that also is like, if you're going into the crowdfunding portal and you're not accredited, that will actually define that for you. So it will tell you what is the maximum that you can invest. So typically if you were going to do 50, you may not be able to, but it is our minimum for the whole fund. But again, the crowdfunding, what it's giving the ability to our investors too, is to see, you don't have to not participate if you don't have 50. Like if you have, we have people invest 40, 25, 17, I mean, all over the board. So it just depends on, you know, what do you have that's not going to make your life uncomfortable if you're investing. So I guess that's kind of a roundabout answer, but I'm happy to, again, if you guys look in the chat, Bill especially, if you'll click on that crowdfund Main Street link, it'll take you to it. And if you create a login, you'll be able to see exactly what that looks like. And then April asked, how will the replay be available? I'm going to just email it to everybody like I usually do when I have time next week sometime. I invited some ladies that were not available to hop on. Yeah, and right now, actually, April, if you are on Facebook, that's something that you can do too. The Facebook, if you go to my page, Kaylee McMahon, I believe that's what it's streaming from right now. You're actually going to be able to go back to my page, and it should be there available afterwards. So yeah, it should be available in several places. Again, I'll send it out via email. You're on our list. And then also what I'm going to do is put in the chat. So you guys, if you have any questions, please post some more. I'm going to check Facebook and see if there's anything on Facebook that's been asked. I've got 7 notifications. Maybe there's questions. I'll see what questions are there. And if you guys have any other questions, pop them in the chat real quick. See a lot of likes. I don't see anything. So we've got someone asking me to ping some info. Okay, I will do that. And I'll look for some more questions on here. So yeah, if you guys have any more questions, or if you want to raise your hand and if you want to speak and ask any questions, feel free. I just kind of went through, you know, the slides, the thesis, the fund structure, who's in it, what the benefits are, you know, with that sheet, like I mentioned. If you want a copy of that, let me know. The last thing, I guess I'll pop into the chat on Facebook and on Zoom are three things. So for qualification, I'm going to put in a quiz. What this will do is this will qualify you as either accredited or not accredited. So I'm going to put that also on the Facebook comments. So that's going to be a quiz that you can click on to get qualified. Which one? Is it going to be crowdfunding, or is it going to be the opposite, our InvestMax portal for accredited investors? First step. And the second step, we'll figure out if you're accredited or not. So then when you're accredited, you'll go to this portal. I'm going to put that here. So this is for accredited. Okay, and then I'll do the same thing over here. And then also, if you are non-accredited, which I'm assuming that you are not, well, not everybody, because some of this is live on Facebook, but if you're not accredited and you're looking at the CHF or crowdfunding offering, this is the link for our non-accredited investors for the crowdfunding platform. So yeah, get qualified, 1, and then 2, if you're accredited, go to that link. 3, if you're not accredited, go to that link, and the portals for the most part will walk you through what you need. And I'll also put that on my Facebook comments as well. While we're waiting for some more questions. Go here. CFN. Boom. So that should have all the info in the comments that you need. Okay, let me see. Any other comments? Okay, so we've got one more question here. I'm checking out that. That's good. Are you live on Facebook under Kaylee McMahon? Yeah, April. It's under Kaylee McMahon, and it's like the profile picture's got me on a magazine versus my page. So it's my actual personal profile. So yeah, search under that, and it's like kind of like a black picture with my face on it because it's a magazine cover. So if anyone is looking for the replay, it will be available on that link. And like I mentioned, the link header has the crowdfunding link in it. And then also in the comments, you can see if you're accredited, where to go. If you're not accredited, where to go to look at the offerings, what you'll want to review. Actually, let me share my screen real quick while we're still recording. What you'll see inside the crowdfunding offering is the actual document. So for example, the offering, so you'll see Form C. So another thing I want to make very clear to everybody is that people keep asking me, where's your PPM? Where's your operating agreement? That is not how a Form C works. That's how a Form D works. So a Form D is Reg D. This is Reg C, so Form C. Get it? Anyway, so here is the Form C, and this is online. This is filed with the SEC. This is what took forever because we had to actually audit all of our company's bank accounts, and then also go through my social security number and go through all of my history and make sure that I'm not a bad actor or make sure that I'm not a criminal, to be able to allow me to do a public offering. So you can see, where it's registered. You can see what you can expect, what our target offering amount is, disclosure, legends, my signatures, the company, what it's called, who is a part of it, what my history and track record is, what our purpose is, the membership interests that are available. Anyway, risk factors, like all of the things that you'll want to know. So basically this is squeezing a PPM and an operating agreement together on a different form called Form C. So again, this is going through what's required, issuer information, and I'm not going to go through the whole thing with you guys, but basically that is available through Crowdfund Main Street on the portal. So you can see the actual offering itself. The fund structure, as I just went over a couple of times, that's also available on there. Also, if you want, I don't know if the formation documents are on there or not, but if you want them, I have them, of course. And then custodial, we don't need to go over that. CF form, PDF, nope. Certificate, I don't think is on there, but if you don't have the filing certificate, I have that. And then the EIN, I think, is actually live on there, as well as the slide deck that we went over there. That is definitely on that crowdfunding platform. If you want to go through it a couple of times, no big deal. And if you have more questions, you've got my email, and I will stop the share one more time and place it in the chat one last time, so that you guys have all my email. If you have any questions, actually, let me give you the link to book a call with me. That would be the best way to get a hold of me. You can just do a 15-minute call, see what your goals are, see what questions you have, see what I can answer, and knock it out of the park. So we're here to help you. And another thing that we've noticed is, like I mentioned in the beginning, that if you're able to get control of your own IRA, which you should be able to, it's in your name, maybe from a former job, etc., you're able to invest that tax-free now and be able to have extra tax advantages that can reduce your income depending on if you're a real estate professional or not. And then also, I have another offer for y'all that are out there that already are real estate professionals, and you have a license. So if you have a real estate license, I can actually bring you underneath my brokerage. So I don't put my brokerage out there very much, but I just thought about, okay, so the people that don't have a bunch of money sitting around that may be investing in these crowdfunding offerings, they probably want to make more cash and want to be able to invest more in the future. So if I can bring you into my brokerage, basically I can host your license. We take a very low fee. I already carry the errors and emissions insurance, and then we actually have a profit splitting model where if any of the agents in the brokerage that are all experienced and do their own thing, if anybody makes any money, everybody gets a piece of it. So that's also helping to make more residual passive income, which then you can put into these investments and then make them cash flow to you tax-free because you're a real estate professional. Anyway, I can totally cover that on a personal call if you want to click on the 15-minute call and book some calls with me. The point is I'm just trying to think of creative ways to help everybody. Another thing we'll be doing next year, likely because I'll have to start another fund once this is full, is a renter equity fund. So if you live in the complexes, I'm going to go back to all the residents and ask them to put in, you know, $1,000 or $5,000, something pretty low, because, you know, they're C-class individuals that live there, but they can own a piece of the building that they live in. And hopefully that will increase the pride and the ownership in the building and keep people from destroying stuff. I mean, they're already pretty good anyway, as we pick really good residents. But anyway, so enough of my blabbing. Let me look one more time at the chat, make sure I've answered everything. Let's see. So I'm qualified, but all funds are not available right now. So I want to go CF route. Assume no problem with that. Yeah, Bill, there's absolutely no problem. Just go ahead and click on that link, like I mentioned, that's in here, and it's also in the chat, or sorry, in the video that's on Facebook, on my Facebook. And then figure out what you can invest. And again, if there's troubles that you're having on there, or like your limit's not working for you or something, just click on that link, or admin@theapartmentqueen.com is my email, and I'm happy to hook you up with the escrow company to answer any questions that's involved. But yeah, there's no problem. April, does the real estate agent need to live, work in Texas? Yes, unfortunately, to be able to host your license with me, I do need to have you in Texas, but I have an agent that's in Cabo San Lucas. I have an agent that's in California. I have some others that are like in my brokerage network, if you will. So not agents, my bad. So they're my brokerage network. So what I can do is I can place you under them, and we can do the exact same model. It's a profit sharing model, again, to create more passive income. So yeah, I actually was just at a conference here in Texas, but she came in from Cabo, and we had a bunch of other agents that were there from other places, all participating in the same thing. So there's some agents that were in that room. Like, I don't want to always just use the extreme example here, but here is the extreme example. Somebody that basically goes out and spends their time recruiting agents versus like actually working. I mean, he makes $600,000 a month, you know, literally just from profit sharing that we all share. And then there's some people like me that just actually, I'm working on handing over a bunch of agents to work with me and Elena Cardone next week. Because there's a certain group of ladies that like her and like me, and you know, and don't live in Texas. They live in Florida. She's in Florida, so she's carrying her group over there. Anyway, point is that, you know, whatever state you're in, there's a co-brokerage owner that participates in the profit share that, you know, we could help you with. So again, you can book a 15-minute call with me. You can email me, admin@theapartmentqueen.com. And any other questions that I have, again, if you have family members, if you need help finding a female mentee to bring onto the deal with you so that you can bump up your preferred return if you're a male, there's a couple of ladies that I'm actually helping with some divorces that would really love to learn, you know, exactly how investing is going, either before they get comfortable or even while they're doing it with you if you're experienced. But anyway, point is there's a lot of opportunity here, and I'm really excited to be able to engage with the community, be able to offer you something that no one else is doing out there. Everybody else, like if you watch Grant Cardone's stuff, he's 250 minimum, you have $1 million minimum. And that's normally what I see with companies is they normally go that way because it's the least resistance. Normally, if you take more money from individuals, then your deals are going to get easier. They're going to get bigger. They're going to make more money. But we're working on democratizing this. And so then we can take on an unlimited number of investors with the crowdfunding platform who are not accredited, so that all of the billions of people that are out there that are just not in that 1% category of, well, now it's 12% of the United States that is now considered accredited. But I mean, if you're in the 88% of the rest of America, and that's just America, you can't get into these deals, which I just think is ridiculous. So especially for women, you know, if we have less to start off with, you know, we'll work with you with what you have. So happy that everyone took their time to join us on a Saturday. Very happy that we can help to lower your taxes, increase your income, increase financial empowerment of women, and also, thanks to the men in their life supporting them, be able to also benefit him as well, of course. So thank you, everybody, for spending time today. And I believe that I grabbed all questions. So again, email me, 15-minute call link, or go into the crowdfunding portal and ask any questions that you have. There's a help link in there as well. Thank you, everybody, and I will see you very soon.